Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network, and unfortunately, we're doing a little chasing of the headlines once again. But having said that, the market has reacted and maybe brought themselves back into a positive feel. But there's a lot of other factors that are weighing in that we're going to have to dive in today, including where the feeder cattle are at with the corn prices we've had. Let's talk about the weights on these cattle. Why do we keep seeing increased weights? And add to it the fact that not a lot of cattle moving this week. And I know it's already in the month of June, but we're going to get the details today. As you can see, joining me is Brad Kooima. Brad is with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's kind of start out this whole chasing the headlines thing. I mean, it kind of talked about avian influenza once again, kind of rearing its ugly head in this market talk.
Absolutely. Unfortunately, we're talking about the same situation again. Susan, thanks for having me on, and good luck with your recovery again with your new knee. Hopefully,
thank you.
This one's got a better warranty than the last one, I hope.
Yeah, no kidding.
Yeah, for sure. 59-year-old fellow in Mexico who we find out now had an acute health problem already, acute kidney failure or something like that, type 2 diabetic, had been bedridden, we're told, for 3 weeks, had never worked on or been to a dairy or cattle farm or a chicken facility. April 24 died, and for whatever reason, extensive testing revealed that he had some strain, different strain, but a strain of the bird flu, a different strain than what we're dealing with here in the U.S. now. People go, really? You think that's what it was? I go, I don't know what else would have influenced that kind of an opening. I mean, with 300 lower on the feeders and almost 200 lower on some of the live cattle right out of the chute. I don't want to underestimate or undersell the news here, but I don't think this is like COVID. I don't think this has. I mean, first of all, the couple people this guy died, but I mean, he was really, really health compromised the way it was. The other two that have had it, they've got watery, itchy eyes for a day or so, and then, even the cattle, I know from a local experience here with the dairy now here that has it, the cattle go off feed. They treat the cattle and the cows are better in a matter of a couple of days. I hope that cooler heads prevail. The sense that I get from talking with those within some cattle organizations as well as the USDA, that the USDA would like this just to go away, right? Mm-hmm. I mean, this isn't some sort of conspiracy here, by them at least, to panic the public. There does seem to be others within the media that seem to thrive on that sort of news. But I don't know, we're off our lows by $1.50. I'm kind of proud of the thing this morning that they're going like, we don't want to hear that stuff anymore, right? But again, I don't, the phone was nuts today with guys. Do we got to hedge them? My bank says I better do this. I mean, this triggers this selling. I get it better than most of you. I don't think that, I don't know. I'm hoping that the markets goes back to trading what the fundamentals are. And the fundamentals are that the numbers are very tight here, especially across the north. I have every expectation that the convergence is the fancy word of saying when do futures and cash come together, right? Well, if you look at those charts, while the basis is quite unreliable during May, what is reliable is that by end of June, you do get convergence where cash and futures do come together. Now, most often it's because cash, a little of both, but most often it's mostly because cash comes down to meet a discounted futures market, right? There are some exceptions, most notably 2014. I feel like we've got 2014-like fundamentals. And so that makes me think that at least across the north, where I have my best, hands-on connections, we do not have a big supply of cattle here. I see no reason why cash doesn't hold fully steady. In fact, I even think it has a chance to be a little bit better this week in my backyard. So that means that as we get down the road here another 2 or 3 weeks, I think the chance is that convergence happens by cash hanging in there and futures coming up to meet cash rather than the other way around. We'll see. Stay tuned. We're going to have 3 weeks to see what that call looks like. But that's how it feels to me. But clearly the market, to me, it's weird today a little bit is why are the back months worse than the front months? If we really thought that there was some bird flu outbreak, I don't really think we're trading that, but we'll see. A little up on the corn, of course, has probably helped to hurt the feeder cattle a little bit as well, Susan.
I was just going to ask you about that. And as we always compare those corn prices for these feeder cattle, what's your takeaway right now?
Well, I don't think if there's a corn grower on watching this, he's going to go like, corn is not high, Brad. Yeah, I got you. Believe me. So we're up 8 or 9 cents today, 10. Big deal, right? You're right. Relatively speaking, compared to where we've been, corn is not high. But, that's the way futures kind of work. Grains both got beat up real hard here. I think there's a little bit of a reality here that maybe, some of these crop ratings, I guess I'm thinking that'll be the best crop ratings of the year. We'll see once what this too wet situation ends up. It's going to take a while to sell that story. We all remember 2019, right? Where it just nobody cared about it until it was a year and a half later. Or at least the USDA didn't care about it until a year and a half later. But the futures trade that stuff. Now, when I look at the index values and what some of the feeder cattle are going to go into that feeder cattle index, I don't think that's going to be lower. If somebody's got a spot where they know that feeder cattle are sharply lower, please call us because I think there's a lot of us that'd be an interest for that. It's just typical futures day where we overreact and that's just the way thing works some days.
Yeah. Well, what about these weights? I mean, you talked about some increased weights continue to happen for these cattle leaving the feedlots.
Yeah. You would bring up the gorilla in the room, huh? Susan Downer, they call her. No, you're right, though. But there's two sides of the market, right? And it's only right that we talk about that is the one thing. Well, I worry about black swan events every day, of course, whatever, some nuances of the bird flu. But in terms of a fundamental that has me a little bit troubled, it is the weights. We went through this whole seasonal time where weights go down always when we transition from yearlings to calves, and they didn't. I mean, they did a little, but, not anywhere like they typically do. And so, thankfully right now we don't have a big supply of cattle, so it doesn't feel like I really don't think we're fighting the market. If you add the futures, a big premium to the cash where it's telling you, just wait, it'll get better. That is a time where typically we would make them bigger consciously, intentionally. Now you got a futures market that's steeply discounted. So I don't think guys are fighting it, but I think what's happening is that the weather has been so ideal. My own personal experience here the last while, performance of these cattle have been off the charts good. And that goes all the way back to really February. I know Nebraska was tough in January, right? For a little while, and then it got better, and then we didn't even have really a muddy feed yard in the springtime. Right. And we haven't had severe weather here. I mean, in terms of like extreme heat or anything yet. So I think the performance of the cattle is the reason why the weights are so big, but that is troubling, especially if you look forward, like maybe a couple of months. Let's say if we get to like August or September, we have calves on feed. There's no question about it. Remember the placements of October and November. So if we're still not if the weights are still big and we run into more cattle, that's where maybe the packer has a chance to get his leverage back and us to lose ours. I hope not, but that's something certainly that's worth asking and talking about.
So as we get ready to wrap this up, what's your thoughts on the packers and where they're sitting right now in cooler space? And obviously that's got to weigh in on consumer confidence as well.
Yeah, I think the Packers I think that the little morning meeting that they've had has to be very difficult here lately, because realistically, the demand for beef here, as far as we can tell, exports again this week. It just came out here a little bit ago, decent, fine. Last week, good. Week before that was the best one of the marketing year so far. Domestic demand, you got boxes there at about 315. That isn't so bad. You've had, good clearance here for the last 2 weekends, both Mother's Day and Memorial Day, the two big beef push weekends. So, I think the Packers struggling a little bit. He'd like to gain some leverage, but he's got meat sold and he's getting closer and closer to the knife. Personally, I had cattle sold to one of the majors Friday that are loading literally right now. So that's only Thursday after being sold on Friday. So I think he's having a hard time knowing how to hold the line. They tried a couple of weeks ago to cut the kill for a little bit, and they quickly went back to 40 hours because they don't want somebody else to kill the cattle instead of them. I think that a couple of things, though, one more thing I should throw on top of that. So it is June 6th, right? D-Day. And every time you have a delivery month, whether it's April or September or June, there's always a few more captive supply cattle in those months. That's just the way it is. There's a contract for it, so they've got more basis contracts, whatever. So there always seems to be a few more captive cattle the first couple of weeks of those kinds of months, like we're in right now. You know me, I'm a big price discovery guy. I'm a big believer in cash negotiation. Okay, so there's always been that little bit of that drag. So that's right where we are. But so now what are they going to buy for this week? Are they going to buy for next week? I doubt it. They're buying for this third and fourth week out of June, where they're going to have more cattle. So I just think that the packer's going to have to try it a little harder because he hasn't got a lot of cattle bought the last week or so, and he's going to use up his formulas and his contracts the first 2 weeks of June, and then he's going to have to come back. So if this thing will leave us alone, this thing being the futures and this reaction to all this other news, I think the cash market's just fine. In fact, it's better than that. I think it's good. So.
Nice to hear some optimism as we wrap up today's show. What's the best way for folks to get a hold of you?
kkvtrading.com or the phone 712-722-0023.
All right, just a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.